It is about that time. That's the great news. I got my headphones and I'm about to plug them in, and I'm going to bring on Ben. I'm going to pull up his Twitter handle, his Twitter page, because it's extremely beneficial. And Ben, I'm just going to ask you so many good questions, man. I cannot wait. All right, here we go. Recording is turned on. Ben, there should be a little bit of a button that says, do you want to talk? The host is asking you to talk or something of that nature.
Yeah. Hey, Jeremy, can you hear me?
Oh, man, like an angel.
All right, very nice.
Sound great. How are you, my friend?
Very good. Yourself?
Dude, doing really good. This is the first time I got a chance to talk to you live.
Excellent, excellent. Fun couple days. We're up, we're down.
Yes. Oh, man.
And exciting.
Wild. But I love it.
Plenty of action.
Plenty of action. That's someone mentioned for Thanksgiving, we were sending out videos, and he was like, I'm thankful for Trump, mostly just because of the volatility. You know, as traders, that's what you look for. You just look for movement. And
absolutely.
Can't argue with
Getting
that.
Plenty of it.
You are absolutely
And if you're not on the right side, you're always one tweet away from
That's going to be the new motto, I think, for a lot of traders. Just one tweet away from greatness, from profit.
There you go.
Yeah, I love it, my man. Well, Ben, tell us a little bit about yourself, man. How'd you get involved in trading? What's your journey been like? I have on the screen share now your Twitter handle, so if anybody wants to follow him, 10,000 followers and growing at Pattern Profits is Ben. And again, I just love your charts, man. Love what you do. So just give us some insight on you, my good friend.
Sure. So I started in the late 90s when it was pretty easy. All you had to do was buy something, and it went up. It was actually my college roommate that got me started. He was, it seemed like, just banking daily. And I said, what exactly is going on here? How are you doing this? And I had no experience at that time with the market at all. And I just kind of followed his lead. I don't even know where he was getting the ideas from at the time, but it was like, we're buying JDSU, we're jumping in, MicroStrategy and Nortel Networks. It's like, okay, I'm in. Yeah. What do you need? What do I need to do? And hey, we made 10% today. We made 20% this week. And I was like, this is fantastic. I think this is all I want to do. Then, come 2000, it wasn't so easy anymore. And those gains disappeared rather quickly. And you learn your lesson. And that probably at that point is when I decided, okay, if I'm going to do this at all, I need to actually learn what I'm doing. And not rely on someone else. But that was kind of my introduction, if you would, to the markets. And I thought, this is something I better learn a little bit more about if I'm going to take it seriously and try to make something more out of this for myself.
Yep, makes sense.
So that's when I started getting into like Ken Slim's strategy, William O'Neill's books. I started, with the Investor's Business Daily subscription and how to make money in stocks, and Stan Weinstein's book, How to Profit in Bulls and Bear Markets. Started really, learning what the market's about and kind of how it works, and starting to try to figure out something that made more sense going forward. And then I kind of just paid my dues, I would say, over a period of a few years. It probably took me, maybe I'm a slower learner than most, but probably 4 or 5 years to kind of figure out who I was as a trader. And you name a time frame, I traded it, whether it was minute candles or weekly charts. I was kind of all over the place, just trying to figure myself out, and what was going to work for me.
Yep.
So then I kind of really got settled in after, having a few winners with the Can Slim strategy, looking at the earnings, looking at the sales, kind of tying that in. I call myself more of like a techno fundamentalist. I basically follow the technicals for entry and exit, but I like solid fundamentals, and that kind of goes from what I originally learned. I'm looking for a new product. I'm looking for the sales growth, double, triple digit sales growth. Uh, Same thing on earnings. If we're increasing those quarterly earnings, that usually is going to get my attention. And then I'll, turn to the charts, and that's where my pattern profits come in. I'll look for those, the typical patterns, the cup and handles, the double bottoms, triangles, flags. And that's more for, when I'm ready to enter, I'm looking for those confirming signals on those patterns and big volume. And that's a big general picture of kind of how I got to this point and where I'm at now.
I love it, man. I really appreciate you sharing that detail and background with me. And I like the new terminology, fundo, techie, or tech fundamental. I think you do a very good job of that, and I do like that. And this is, again, I have your Twitter up here.
Mm-hmm.
I really like this tweet because I had a mental paradigm shift probably about 7 months ago when I did realize that there are pretty much at any given time a handful or decent, maybe two handful of stocks that are growing revenue, growing guidance, growing profits, and they're starting to lead the market. And you have an opportunity to invest in them, again, long-term for life-changing amount of money. I think that's a phenomenal tweet that you made back in February 8th. And what a great time to make that comment, a year ago, because you just had so many incredible moves since then.
Yeah, you really have. And, a lot of these stocks, recently a lot of the software stocks that were leading got hit, but it's probably only a matter of time before, they do start to recover and climb again, because that's where a lot of, looking forward, where the big annual sales and EPS is going to come from. So I think, it's probably, they got way ahead of themselves, no doubt. And that's probably what caused them to come in and correct eventually. And, I've said to a couple of followers too, pay attention to the ones, the baby got thrown out with the bathwater on some of these, they all took a hit. Some of them deservedly so, that were, trading at 400 times next year's estimates, that they were way ahead of themselves. But
Sure.
There were, many others that, took a hit. And, I think too, looking for, like I have kids now. When I started this, I didn't have kids, but now I look to my kids and what are they interested in? What's occupying, a lot of their time, and what is he going to school? My son is young, he's 7, but that's just old enough to kind of pick his brain on what's popular, and paying attention to that has led me to Roku. I know he spends, a lot of time. Disney Plus is another one. Disney is another one. Paying attention to those things that are in our daily life, that sometimes if we're not really thinking about it in terms of investment, we just kind of take it for granted. But these are actually the big winners down the road. I think Roku is like one of the best examples of that right now, with everybody cutting the cord, and they are, a lot of people didn't understand Roku going back. They make that stick that you put in the back of your TV, and then you start to realize, no, this is actually the platform for the future. This is the operating system of Disney Plus and all these cord cutters. This is where they're going to go to access their streaming content. And I think those are the kind of things that you kind of realize in your daily life, that, hey, I'm using this every day.
Mm-hmm.
My kids are using this every day. The college kids, it's in every dorm. So those are the things that I kind of now really kind of pay attention to, and then come pull up the chart and pull up the numbers and say, all right, let's see what's going on here. And then, okay, where can I get in, and where's my risk minimal,
Yeah. So Ben, how do you play a move like that? So this was back in, February. Again, I'll do like a giant pink circle where you posted that tweet. And I know that tweet doesn't specifically mention Roku, but either way, how would you play something like that? Do you do shares? Do you sell puts? Do you buy calls? Do you do leaps? Combination of all three?
Yeah, I'm usually the first thing I'm going to do is buy shares. The
Okay.
first thing I'm going to do is take a position in shares. I'm usually looking for that big volume burst, and it's usually on news. It's earnings. It's a new product. It's something's coming out that's giving me that volume spike. So if you see just before, early what's that 2018 there, but right before your circle there, there's probably earnings right there. You see that big volume spike. You got the gap. You kind of know, okay, the analysts and the funds and the institutions, they're offsides here. They're on the wrong side of this, and the report came out or news came out. It's spiking. They're piling in. The volume is 300% or more above the average. Not that I'm necessarily buying that day, but that's going to get my attention, right there. And then, I try not to buy in front of earnings, but I try to buy as close to that earnings report or as close to that big spike ahead of the next report as possible. Because I want to build enough cushion, in my position to have the room to hold it, through that next earnings report. If I'm only up, 5 or 6% or something, and I've only held it for a couple of weeks, and here comes the report, there's a good chance I'm gonna get out of it, ahead of the report, and especially on a name like this where the implied move is 20%. I don't want to go into that holding a small gain and then see it completely wiped out. So trying to buy very close to that good news or that previous earnings report. A lot of times I'll use that high, that gap high from the report day as kind of my pivot. So if we're above that, stay long. And that's a lot of times is even my entry, is taking out the high of that earnings report.
Yeah.
That tells me, they were caught off guard by this. It's stronger than expected news and earnings, and up we go.
So can you give me like some tactical ideas of how do you start building a position? Is it 100 shares at a time, 30 shares at a time? Do you do some type of math formula to find out your risk? What does that look like?
Yeah, sure. I'm probably starting anywhere with 10% of my capital. So something on Roku, maybe I'm going to start with anywhere between 500, 600, maybe even up to 1,000 shares. And then on the way up, I'm never one to average down, but on the way up, when we get those dips, like if you're looking at Roku still, the trend line support, that's an area that I'm probably going to add. Switch maybe over to a weekly chart, the weekly 10 MA, which is again, an O'Neill, a big area of institutional support. As we, find support there at the weekly 10 MA, maybe we dip below on lighter volume, reclaim that 10 MA. I'm gonna add, and it's going to be much smaller than my initial add. So maybe if I had 1,000 shares, maybe I'm only going to add 200 or 250 more. It's going to be like 20%, 25%, because ideally I don't want to raise that cost basis too much, or else I'm going to get shaken out on just a normal pullback. So use that weekly 10 MA a lot, especially once my cost basis is below that weekly 10 MA. That's really where the fun begins, because really at that point I'm going to switch to the weekly chart. I'm not really going to pay much attention to the day-to-day moves. I'm usually just checking it, really closely. How does it close? But I'm usually going to switch over from the daily chart and focus a lot more on the weekly chart once my cost basis is below that weekly 10 MA.
I love it.
I think that's how it helps tremendously not to get caught up, especially over the last couple of years, in the day-to-day whipsaws. And I mean, if you're watching it, and I've done it,
Absolutely. It's hard not to, but I mean, you
agree.
shouldn't do it.
Right, you shouldn't, but yet you're still, especially once you start to make some progress. I think the toughest part is probably in that very beginning, when you're trying to build a little cushion to get comfortable with the pullbacks. And, when you're kind of in that, okay, I'm up, 6%, I'm up 8%. That's when, if you're watching it every day and it comes in 2 or 3%, you're like, I'm going to lock it in. Only to see it go up, 5% the next week. But yeah, that's kind of, where I try to get away from that watching and sitting in front of the charts. And again, I've kind of paid my dues to earn that, but I think that keeps the emotions in check and really helps to just kind of stay focused. And even when I would focus on the daily charts a little more, it's a new entry, and I'm kind of seeing how it acts around a pivot. The close is always more important to me than what happens at lunchtime or the first 30 minutes. I mean, where is it at that last 30 minutes? What's happening with it that last 30 minutes? If I'm going to make a decision, I'm usually basing it on that last 30 minutes. Or if I've already switched out to the weekly, how's it looking on Friday? How's that Friday close looking? That's usually much more important than what happens, in between.
Got it. Ben, what charting software do you use?
I use TrendSpider, and I think it's fantastic. It has helped me, I use MarketSmith, and I love MarketSmith for my scans, which kind of put me into, a lot of ideas, and that's where a lot of my ideas come from. But once I've kind of said, okay, this has my attention, I want to buy the next dip in it or what, TrendSpider's, been fantastic setting those alerts. I might be out to lunch with my wife or something, and the phone buzzes, and VWAP's getting hit here. Hold on, I'll be right back. Go check out what's going on. Okay, we're maybe take an entry at the close today. But it seems like even when I'm not right in front of the monitors and watching, I'm still connected when there's something I'm really interested in taking a position in. So yeah, TrendSpider has been fantastic.
And so is that newer for you, or have you always used them?
No, it is newer for me.
Yeah,
it's
same here.
Maybe the last couple months, last few months.
Yep, same here. And
that platform just has gotten better every week. Jake over there is doing an amazing job. Anything we've said, hey, what about this? It seems like a couple weeks later, oh, there it is. They have it.
Yeah. Agreed. Super useful, really great customer service. If anything else, you have that. When you're talking about MarketSmith, I've only been turned on to them, I think, in the last 6 months. And again, a really good scanning service. This is, I think, one of your velocity scans. Is that correct, through MarketSmith?
Yeah. Now what this is on that particular day, these are stocks that are up at least 3%, and the average volume is 30% above the 50-day average. So, these are ones
the volume is up more than the 50% day average. Is that what you're saying?
Yes.
Interesting.
On volume.
Interesting.
Right,
okay.
right.
I love it.
So when you see that volume spike, and this is updated all throughout the day. So when I am at home and kind of going through it, and I'm clicking, getting it updates maybe every couple hours to see what's moving and what's hot. But this actually helps me too. Not only just finding individual stocks that, why is this up 5% today on 200% increase in volume? What's the story here? What's going on here? So that's kind of where I'll start to my research. Then I'm going to dig in. Okay, what are the earnings here? What are the sales here? What's the story here? What's getting the attention? So then, that kind of leads me to things that are, for deeper examination. But even there's times when there'll be nothing on this scan, or maybe only 2 or 3 stocks highlighted. Kind of know, okay, we're either ready for a pullback or we're in a pullback. Maybe I should be a little less aggressive. So it helps in that way. But even more so, a few weeks back, all of a sudden it was filled. I'd have, 30 tickers and 20 of them were biotech.
Yeah.
Maybe I should start paying attention to what's going on with biotech here.
Yeah.
And even before that, like a month before that, it was filled with shippers. Every day there'd be 10 shippers, in the scan. But, maybe I need to pay attention with what's going on in the shippers. What's going on over here? So then that would kind of start my research. And, there's these new laws starting next year. And so you look at the earnings, for the shippers, you look at some of the select biotech that are going to turn around and their sales are going through the roof. Some of them are actually going to have some earnings after not having earnings for the last 5 years, or actually some of them since they've been in existence, they haven't had, any earnings, and they're turning around. So that scan, and I share it every day. I have both shared on MarketSmith with those who are subscribers there. And then at the end of the day, I'll share it and kind of do a little summary. Hey, this is what I saw. This is what stood out to me. This is what I was watching. And it seems like the followers love that because we end up in a lot of the same trades. It kind of gets our attention focused on the same names or the same group. And then we end up, trading a lot of the same names and same patterns.
Mm-hmm. Again, I do love these scans. You are a great follow on Twitter. So again, just thank you for putting out actual content.
Thanks. I appreciate that. And I know what you mean. I try to keep the opinions to a minimum and just throw out, here's the charts, here's the facts, here's what's going on. Oh yeah, I see it there. The put call ratio. That's another
this one right here.
Yeah, that one right there. I'll share that often, especially like you see there when we get up, over like 1.2 is kind of when I start paying attention. We've been pulling back. We're correcting a bit. I think we're not that much, a couple percent. But when you start seeing those fear indicators rise like that quickly, when we're only down a couple percent, it starts to lead me to believe, well, fear hit this market awful fast. 1.3, that's we usually see those kind of numbers when we're down 5% off the top, 6% off the top. That's when we're usually seeing those big numbers. So that's why I pointed that out yesterday. It's like, look, there's already plenty of fear and we're only a couple percent, off the top. That good sign for going higher.
Yeah. And I think it's interesting how quickly those can rise. What's the highest that you've seen in recent weeks or months?
Oh, I think we had almost 1.7 going back to, or 1.6 something. That was in when we came off the bottom of December of 2018. I mean, that was yeah. We were like, I think we were at 1.6, 1.7 intraday. I think we even closed there near 1.6 off the top of my head. But that was one where you said, okay, if this isn't it, we're very close.
Mm-hmm.
And you kind of get a sense that, okay, I need to buy something here because there's a good chance, that we're going higher from here.
Why is that? I mean, what causes, is it sentiment that people are just really afraid when you have a bigger ratio like that? People are buying puts, which means the general public is wrong.
Yeah, exactly. That's exactly.
Shoot, I was hoping it wouldn't be that easy.
Yeah, it's they're loading a boat and it's all on one side, and usually when that fear starts to peak, and it's the same thing at the top, when you get euphoric and you start to see everybody piling into the calls and, the put call ratio drops to 0.6 and 0.7 and you start getting those readings, it's the same thing. Anybody who's bullish is already in, they're already loaded up and, there's nowhere to go from there but down. And that's kind of how I view the same thing at the bottom. When everybody's starting to get bearish and everybody's starting to pile into the puts, it's usually everybody that wanted to sell already has. They've already, exited, and now it's time to go the other way.
Yeah.
So not that it's, the ideal end, nothing is, but it definitely, when you have kind of in the back of your mind where that sentiment is and know that it's at an extreme, then you can start looking into the charts and say, okay, where are the reversals at? Do I see a heavy volume reversal coming in on, either whatever your time frame is? But yeah, you start seeing those reversals come in, and then your technicals start lining up with your sentiment, as well as, the sentiment on Twitter can be very helpful as well. Sometimes you don't even need the put call ratio. You just can tell by the vibe out there, everybody's on one side of the boat, especially at the bottoms when everybody gets super, super bearish and everything you read is a bearish tweet and yield curve inversion and you name it, it's all negative. When it gets like that, it's kind of like, okay, I'm going to start looking for that reversal.
That's so accurate. That's so accurate. So, I mean, since we're here talking market, what's your general opinion, general thoughts from here? What do you think happens?
We go higher.
Yep.
A lot higher.
Yes.
Significantly higher.
My bull friend, bring it on. I love it.
Yeah. I mean, in the short term, maybe we go a little bit lower first, but you don't fight the Fed. I learned that a long time ago. They've got your back. We're in an election year. I do not think they'll throw everything at it before they let this market collapse. And it's just not going to happen. Maybe in the short term, maybe we come in a little bit more, which is actually healthy, to set up a Santa Claus rally here, and then I think we're going much higher.
Yeah,
so just globally speaking, a lot higher. And
I'm with you, man.
About it.
Yeah, I'm actually fully with you. It's actually kind of rare to reach out to someone randomly and kind of ask them, because it's normally only bears, but that's what makes the market go higher, is that everyone's bearish.
Yep, I love it.
Because
as my stream starts filling up with all the bearish retweets, and I start seeing everybody getting so negative, and then it's like, okay, let me start studying those scans a little closer. What's closer to a buy point here? And
well, here's the thing, man. I think that just looking at, again, let's just say technicals. Let's totally throw out anything that has to do with fundamentals and cash and the debt cycle. Let's just look at just pure technicals. We on the SPY, on the NASDAQ, on the Qs, we had a very similar move in 2014, 2016 as we have now.
Absolutely.
I mean, it's almost identical. The patterns are almost the same. The candles are almost the same. The fear was almost the same. And you're coming up into an election year. So I know that 2020 is an election year. 2016 was an election year. I personally think the market continues to go higher. And again, we could be wrong and it could just come crashing down, but there's so much money out there. They're printing so much of it. That's the exact same thing that's happening in 2015, 2016. And the patterns are the same. So exactly. I just don't see why we don't just replicate this and just slowly keep grinding and melting higher, because that's what we've done before. So all things equal, if I'm just looking at the chart, it looks the same to me.
I would completely agree with that. It's funny how soon we forget that, like, really we consolidated for the last 2-3 years we've consolidated. In, zooming out like this, you can see even longer that we have been in one big, long, consolidation. And if you look back, that's kind of the same thing that we did before. When we break out of that consolidation, up we go. And I'm all for the steady grind higher. I'm all for an easier market, because it hasn't been as easy, over the past few years as just buy and hold. It's actually been a very difficult market to just buy and hold. I mean, I think thinking back to 2016 and into 2017 was better when, like Grub and Square and some of those were just up every day. Just buy it, hold it, don't worry about it. But we haven't really had that kind of market over the last couple years. So yeah, I'm looking forward to just kind of let's grind higher, and we'll still have some dips along the way, but those are the opportunities now. I think that it's amazing how much of the fear from 10 and 11 years ago is still out there. They're still calling for a crash. There's any sign of weakness, the crash calls start. And how often does that really actually happen? It's 1 out of every 20 times that it's called for. It's probably actually more than that. But that fear still lingers out there. So when we get that little dip, especially we start dipping back 3, 4, 5%, it's, we're definitely going 20 is kind of the mentality right away. That little bit of pullback really changes, the sentiment so quickly. And I think a lot of that is because of, 2018, that pullback late in December, that was a little scary too. And that was for a lot of people who hadn't really experienced, those of us who have been in the market for, 20 years plus, we've kind of seen those big, corrections before, but a lot of the newer traders, they hadn't seen much like that.
Agreed.
That type of correction.
Yeah. Agreed.
So yeah, that fear for those of us who have been through, even back into 2000 and some of those bigger corrections, it's amazing how that's still at the front of a lot of traders' minds. So we start pulling in, everybody, gets bearish real quick. And you see that in the put call ratios, and you see that in the sentiment.
Yeah. I'm with you, my friend.
I'll be thrilled. Let that fear, I love when we're grinding up and the fear is still there.
Yeah,
that's
totally.
That climbing the wall of worry, I hope that fear stays with us a little longer.
So over the next, let's just say 2 years, what are some companies that you like a lot? Some of these growth ones that you're looking at, and any answer is acceptable. It can be biotech, pharmaceutical.
As far as specific companies?
Yeah.
I like Sleep Number.
Okay. Tell me more.
SNBR. I do, it's actually at a point where I like to add, I've got a starter in it. But what they have lined up and what's coming out is these smart beds. And they're basically going to give you a health check. My understanding of this anyway, from what I read, is they're basically going to give you a cardiac health check, while you're sleeping. And how much sleep did you get? What type of rhythm were you in your heart rate? And, this is kind of the next step with those, and then send all that info to your smartphone.
Get out of town.
I think it's a cool new technology, and it kind of ties in with what's going on in general in the health field. So I just think that's more and more studies are showing how important sleep is, and how much of your health depends on getting a good night's rest and that. So I think when you take the whole Sleep Number concept, their marketing has been great too, because if you're watching football on Sundays, you can't help but see their ads over and over and over.
Yeah.
I was in Sleep Number all season long. So, that's kind of one that ties in, a couple things with health and kind of where that's going, along with, the new technology of having a specific number for comfort, to get a good night's sleep. So that's one that has my interest. You saw, I've been in it a few weeks now. I think it was about 6 weeks ago. It looked like it was ready to break out, and then it stalled and came in a little bit. I think at least when I looked this morning, I was having a pretty good day today. But that's one that I'm keeping an eye on going forward. You had the big consolidation, broke out from that, kind of consolidated again, has had a little bit of wild action over the last few months, but kind of settling down now. So that's one that kind of excites me a little bit. And if you would have told me earlier in the year I'd be buying a mattress company, I said no way.
Well, I can make good arguments for that, because as what's happening is, and again, this is just my perspective from like let's just say a millennial's perspective, whatever. mentality of the baby boomer, work hard as you can for as long as you can until you retire. The you can sleep when you're broke mentality, right? That's what my dad said. He was like, I'll sleep when I'm dead. Right. Well, now he's dead and he's sleeping. So it's like the whole, what happened is there's a small change been in at least in my field, my perspective and my vision, where the younger people are saying health is your number one wealth, right? Sleep when you're wealthy,
Correct.
sleep now, sleep better, enjoy your sleep. Sleep is very important. You need to have a great night's sleep. There's so many studies come out about sleep. And I actually, I've done a little bit of research on a company called INSP, which is also doing very similar, not a mattress company, but INSP is doing a lot of sleep studies, and you're 100% correct. They're also focusing in and spending a lot of time, energy, and market research and data on collecting information about people and how they sleep and how to improve it. Because we do, as humans, have to sleep. It's a must, right? You don't have to invest in the stock market. You don't have to have a charting software. You don't have to drive a car. You don't have to go to work, but you do sleep. And this is a sector, man. This is an industry that is becoming sexy. And I know a few companies that do really well just as a commercial, in the commercial real estate field, just renting out space to mattress, to mattress companies that just sell mattresses.
Exactly. And that's kind of what brought me to Sleep Number to begin with was, again, running those scans through MarketSmith. I was seeing Tempur-Pedic. I was seeing Williams-Sonoma. I was seeing Lazy Boy. They were all kind of coming up at the same time. And this is when software was really in the heart of their correction. And it was kind of moving more from growth to value. So you were kind of seeing a transition where, earnings and kind of forward growth, and that was mattering now. There was a while there where if you just had sales, that's all you needed to rock it up. But when that transitioned in, I started seeing these names, and I started seeing, Sleep Number, Tempur-Pedic, Williams-Sonoma, Lazy Boy. There were a couple others that kept popping up regularly, and that whole group, you're right, was getting attention, and it was attracting. And then, when you did look into kind of the numbers and the stories, they were trading at single-digit PEs, and there was a fundamental, reason for why the technicals were starting to look good, and that's kind of what steered me towards that group. So there, on Tempur-Pedic, you can kind of see that they all had that breakout back when software was really taking a hit, and the big growth stocks that had led, the Twilios and Shopify and those that had been leading when those were really getting hit, these were this and housing and construction and, those industrials, those kind of stocks were all rising to the top. So now they've kind of consolidated. So interesting to see, going forward, where those go from here. A lot of the software stocks are starting to bounce now and come back, and some of them should, because some of them went too far in the other direction.
Yeah. Let's find out this question, Ben. Who's buying the data that Sleep Number or Tempur-Pedic would be providing through the mattresses?
Yeah, that's going to happen.
Has to happen. Yeah. So who's collecting that?
Well, Google just took out Fit. So, but again, this is the big picture. Google wanted that info. They wanted, and that's where I think them taking out Fit came from. And, that's definitely, where we're going. I mean, people are watching their stats while they're working out on their watch now. What's my heart rate? What's my oxygen? What do my vital signs look like while I'm exercising? And I think that's a big trend. I think we're at the very beginning of that, which is why, you were talking about INSP too and their sleep studies. And, I think they're going to start tying that sleep into, maybe even some of dementia, Alzheimer's, maybe even some of the other disorders, diabetes, that sleep, not getting the sleep ties into our health just as much as what we're eating. And more studies are showing that. And I think that is, a big trend going forward. And, you know, speaking of that trend too in diabetes, that's another group that I think is changing the landscape of what happens. The TNDM,
Yeah, thanks for
POD,
bringing that one up.
PODD. Yeah, you know, that group, they're kind of changing the way that we get those blood sugar readings and the way we're going to treat and the way we're going to read the blood sugar levels going forward. They're doing it non-invasively. So, you know, the seniors love that they don't have to poke their finger every day, 2-3 times a day, you know, to get the reading. They can, there's, you know, other technology now where they can press a button, hold it up to their skin, do it non-invasively. And I think that again kind of ties into that big global theme of changes as far as, and then if you get into the biotech, you know, we're going to be treating all these, we're going to be diagnosing them differently. We're going to be treating them differently. And that's just all one big theme, you know, going forward.
I love it. I think that's really, really insightful information. What was the other company you were telling me? POGG?
Oh, PODD? Pod,
PODD.
PODD.
Tell me about this one. Is that similar to Tandem kind of?
Sorry, 1 second. My lawn guy just showed up.
Man,
The worst possible time.
Hey, it happens.
Right outside my window.
That's funny.
Yeah, PODD. That similar to. I mean, they're in the same group with like NVCR and EW, Zixi. These are all products. They're like handheld devices. You know, when you think in the past of when you had to check your blood sugar, you had that little device that pokes your finger. You had to put the little bit of blood on the lancet, and then it tells you, okay, here's what your blood sugar is. And if it's high or low or whatever, you got to, you know, do that multiple times, you know, throughout the day. Well, now they're having these systems and these little, you know, handheld devices that you can check your diabetes just by holding it up to your arm or holding it up to your wrist. And then that info gets sent to your computer or sent to your smartphone. And you can read, okay, this is what's going on. You can have it sent immediately over to your doctor's office, you know, without having to poke yourself or without having to go to the doctor. You know, there's a lot of seniors that can't do it, that can't take their own, you know, blood sugar check. They have to have a family member or an aide or somebody, you know, in the home to do that, or go to the doctor's office and have them check it. But now they're, you know, really being able to get these readings, you know, non-invasively. And I think it's going to be a huge hit. And you know why? You buy it one time. The seniors now, and through the insurance too, those little devices, the little lancet that they use to put the blood on into the machine, those aren't cheap. I think they run about maybe $40, $50 a month, even through your insurance. So the seniors are going to love the fact that they can buy one little handheld device, get their blood sugar measured, send it right over to their doctor who can read it and say, hey, oh yeah, you need to up your insulin. You need a little less. We can change them. I mean, that's completely changing it from the way it is now.
That wasn't even on my radar, but you're right. Yeah, you're totally right. Look at this. I mean, look at this gap too, back on November 6th. Wow.
So, and that whole group, I think you can probably throw TDoc in there too.
Teladoc, yes. I've heard a lot about this one.
You can throw them in there too. I mean, they're changing the way, you know, imagine you've got a cold, you need some antibiotics. I'm not even going to leave my house. I'm going to, just like we're doing, I'm going to Zoom over to my doctor and let him know what's going on. And hey, these are my symptoms. This is what's going on. Okay, here's your prescription. We'll call it in. You go pick it up. You're done. You know, from the comfort of your home. So that was never the case. You know, you always had to make that doctor visit. They needed to check you out. They're going to look at your eyes. They're going to look in your ears. They're going to look in your throat. Listen to your heart. You know, that whole exam. We're moving away from that. You know, we're moving in, and you know, the corporations love it too. I think more and more the corporations are moving towards, you know, these video conferences to treat these, you know, minor illnesses. So yeah, just a whole new pathway coming down the road. And I still think this is just infant stage. This is the very beginning of it.
Got it. That's, man, really insightful information. And I'm writing these down feverishly, and I'm going to be studying them because, yes, I think you're right. We have to think, and this is the time to do it, right? Getting people together that are knowledgeable, that know how this stuff works. I can easily say that I've missed all of this Roku move because I'm an idiot.
You're not alone. It's okay. You're not alone.
Yeah. I did catch Square though. That was the big one for me. It was Square because
nice.
Yeah, well, because I used it, I understood it, I got it. The concepts made sense to me immediately. That was the one that's probably been my biggest trade. My single biggest investment probably of all time, I think, at this point.
Beautiful.
Yeah, but again, I understood it. I get it. It made sense to me. But there will be more. Like this is, and Square's not even close to being done, by the way, in my opinion.
Correct.
But
that was one heck of a run, and if you got it, fantastic. And knowing that you had used it, that was your conviction.
Yeah,
that was where you can say, I'm going to be able to hold this one for the long run. I understand what's going on. I understand how big this is going to be. It made my life easier. Where I'm shopping, they love it. They're using it. Yep. You've got conviction and you end up with a big win.
I love it. No, you're absolutely right. And so again, you're going to have those, and you have to remember, if you're, as you're listening to this interview, just keep in mind the overwhelming number of companies to invest in. Like, you're going to run out of money way before you run out of investing opportunities. So you do want to make sure it's a company that you understand, that you like. If you're hearing about a company that you've never heard of for the first time in this discussion, research it, please. Don't just go out and buy it. Understand how they make money, look at their products, touch them, feel them, understand them. And if you don't want to, then just move on. Try to find something else. But ask questions like this with people, because that's the only way that we learn. I learn about a new stock company, a new company on the market at least every day. Even now, I learn at least one new company every day. I'm like, I've never even heard of this thing.
I learned a new one this week, INSG. I didn't know anything about it. And 5G play. So you believe I'm reading all weekend, actually over the Thanksgiving holiday. I'm reading as much as I can about 5G.
Did you hear about this one from the Motley Fool thing as well?
This particular company I got off of my scan. This was off of, it popped up on the scan, and, I have some very basic fundamental parameters into that scan, because if you just put price and volume, you'll get 50 of them, and some of them are, under $1 and not really something that I'm interested in looking in longer term. But yeah, this came up on my scan, and I said, look at this volume coming into this stock. Is a big picture, beautiful cup and handle there. The stock's breaking out, volume's coming in. And so, yeah, I had to start doing some research. And evidently this is 5G modems. This is, where we're going with 5G. And again, early infant stage of this one as well. But the stock looks great here.
Yeah.
So
what are
down
they?
The road, looking at the numbers, sales accelerating in the last 3 quarters. I think we've gone from 7 to 15 to 25% in sales. Earnings coming next year and next quarter. They're going to start making some money. So yeah, I mean, this is how it starts. The price and volume gets my attention, and then, okay, well, what do they do? Well, when you start thinking big picture 5G, okay, that's what's coming next.
Yeah.
And then you start researching a little more.
Yep, the Internet of Things, all that's going to be really, really fun exactly. Once it starts going.
And if something like this comes up and I don't see, there's no sales, there's no earnings, the story doesn't interest me, then I go over to, okay, what's the short float over there? What's, how many days to cover on this? And then maybe it's just a trade.
Mm-hmm.
I'm just in for that quick pop and that ride and get out. So no harm in that either.
Man, I'm so glad you brought that up, but you're absolutely right. Bingo. That is massive, really, really important and integral to keep in mind. Like, you can still pull something up. Like this company, like I, again, haven't researched it at all, but if I had seen it back in 2008, I would have liked to think that I would have caught this little breakout, 291 and some change, probably sold here at 4 and some change. I don't know if I would have, but I'd like to think based on the technical chart that that looks very clean. So yeah, man, I think that's an incredible discussion. And I just want to say thank you so much for your time, man. This has been very valuable to me, and I'm quite positive it's going to be very valuable for many other people in the future. So thank you.
Jeremy, my pleasure. I thank you for having me.
Yep. You're absolutely welcome, my man. Have a great rest of your week. Okay.
Thank you. You too, sir.
Yep. My pleasure.
Have a good one.
Yes, sir. So ladies and gentlemen, there you have it. Been with @Pattern Profits on Twitter. I do follow him on Twitter, and if you want to follow him, he follows me. We follow each other. Shoot, I forgot to ask Ben about the Florida Gators. So, I don't know if you're a big Gator fan, Ben, but I graduated from UF back in 2009. So anyway, thanks so much for being here, man. John says much appreciated. Ben said he's a Canes fan. Got it. Understands. Sorry. You in the 80s. It's hard not to be a fan of you in the 80s. Some great ESPN 30 for 30 documentaries about those guys as well. I love it, team. Thanks so much for being here. I'm going to bounce out and enjoy the rest of my day. Jason says, before you go, what do you think of square long? Looks good, Jason. I like it. I've been looking on my other charts. 15-minute chart looks nice. If you didn't take PCG, though, I wouldn't take this one. Because you asked about PCG 3 or 4 different times. It looks phenomenal. This one pretty much looks the exact same. So square, looking nice. It's for a very, very slow grind higher. It's not going to be a massive winner. And then this was Expedia. Expedia, Thomas is in on Expedia bullish. So looks good and right on. So team, thank you so much for being here. Have a great rest of your Wednesday. I will be back for Energy Wednesday from 5 to 6 p.m. Eastern Standard Time. Appreciate your patience, your diligence, and your willingness to help me enrich lives. You are amazing. And until next time, live life, and trade it. You guys rock.